Hello, everyone, and thank you for continuing to join us throughout the day here at the Lytham Partners Spring 2024 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. During this fireside chat and company presentation, we welcome Greenfire Resources, ticker symbol of GFR, traded on both the NYSE and on the TSX. Again, ticker symbol GFR on both of them. And joining us from the company is Robert Lobach. Before I do turn it over to Robert, I want to remind everyone that the company is available for one-on-one meetings throughout the conference here today. If you've not already scheduled your one-on-one meeting and would like to do so, go ahead and shoot me an email. That's Blum, B-L-U-M, @lythampartners.com, or visit the landing page for the conference, which is lythampartners.com/spring 2024. From there, you can click on the investor and attendee registration and make your one-on-one selection. So, Robert, I'm going to turn the floor over to you, go through the presentation, and come back at the end for some follow-up questions.
Thank you, Robert. Greenfire Resources is a growth-oriented oil sands producer focused on the sustainable development of its Tier 1 assets in Western Canada using steam-assisted gravity drainage, or SAGD. SAGD is an enhanced thermal oil extraction method where bitumen is heated and recovered from the ground using steam. Greenfire consists of a team of thermal oil experts who have collectively commissioned and operated most of the SAGD sites in Alberta. The company is led by the president and CEO, Robert Logan, and the CFO, Tony Kraljic. Greenfire's current production of approximately 20,000 barrels per day and is targeting 70% production growth over the next 2 years to 34,000 barrels per day using established SAGD production growth and optimization techniques. As Robert mentioned, Greenfire is publicly listed on the New York and Toronto stock exchanges under the symbol GFR. The company has a current market cap of approximately 560 million Canadian. The company is committed to prioritizing debt repayment. As of Q1 2024, the company's debt includes $300 million US of senior secured notes due 2028, which Greenfire intends to reduce in the near term using 75% of excess cash flow until total debt is less than $150 million US. The company also has an undrawn $50 million revolving credit facility and $90 million of cash on the balance sheet. This capital structure and liquidity profile positions Greenfire with material financial flexibility as we pursue our production growth strategy to drive value for our shareholders. Greenfire's Hanging Stone facilities are located in Western Canada in the heart of the Athabasca region of the Canadian oil sands, which holds the third largest oil reserves in the world. Greenfire's Hanging Stone facilities are underpinned by a Tier 1 SAGD reservoir, the best of the best, which provides structural capital and operating cost advantages, as well as productivity and recovery benefits relative to SAGD assets held by most public peers. With ownership of 2 of the 5 Tier 1 SAGD assets in Alberta, Greenfire provides public investors with pure play exposure to these differentiated and concentrated Tier 1 oil sands assets. Greenfire's Hanging Stone facilities were originally constructed and previously operated by an international state oil company and consist of the expansion asset, which is 35,000 barrels per day and 75% owned by Greenfire, and the demo asset, which is 7,500 barrels per day and 100% owned by Greenfire. The capital expenditure and project risk profile for SAGD is typically front-loaded to build major processing facilities and infrastructure. Greenfire's hanging stone facilities are already constructed and currently producing, and include pipeline infrastructure in place for diluted bitumen and diluent that can accommodate the company's growth outlook. Greenfire has consolidated a large, long life, and relatively low decline oil sands reserves base, which was previously conservatively operated, offering what the company believes provide ample opportunities for additional value generation. On a proved basis, the company has 183 million barrels of reserves, representing a proved reserve life index of 28 years, with a net present value of 2 billion Canadian, or 24 Canadian per share net of debt. Greenfire's strategy is to grow into the capacity of these existing plants by implementing what the team calls the SAGD playbook, which includes industry standard production growth and optimization techniques, primarily focused on drilling and surface facility optimizations to drive capital efficient production growth of 70% from current production levels to the facility's debottleneck capacity of 34,000 barrels per day over the next 2 years. Greenfire's Tier 1 assets, strong balance sheet, and talented team position the company to continue to execute our growth strategy and drive further shareholder value creation, which is anticipated to support material free cash flow generation for debt repayment and position the company for future potential shareholder returns. In 2024, the team is executing the SAGD playbook to grow production 25 to 40% relative to 2023 to 22 to 25,000 barrels per day. Capital expenditures in 2024 are expected to be 70 to 90 million, with approximately 2/3 of these capital expenditures to be allocated to drilling activities focused on exploiting its existing inventory of preheated bitumen locations with refill wells. Planned capital expenditures for facilities and field infrastructure, representing about 1/3 of total expenditures in 2024, will be primarily related to surface facility optimizations, including projects to augment water and vapor handling capabilities to support higher production rates on a sustained basis. Greenfire has material exposure to a re-rating in Canadian heavy oil, with production 100% weighted to benchmarks that are linked to WCS differentials. With the Trans Mountain Expansion Project now operational as of May, Western Canadian heavy oil producers are positioned to benefit from approximately 600,000 barrels per day of incremental pipeline capacity, which could result in a tightening of WCS differentials over time, which would be supportive of Greenfire's free cash flow generation potential, despite the company not having any contracted capacity on the Trans Mountain Expansion Project. Robert, I'll turn it over to you for questions.
Fantastic. Thank you for running through that. Yeah, I want to start because obviously I think you're a new story to many people out there. Maybe if you could give a little bit of an understanding of how you came public, and then we'll dive into some of the valuation metrics.
The team went public via SPAC in September of 2023. The SPAC vehicle was through a partnership with a previous financial backer that supported the initial acquisition of the expansion asset in September of 2021. The leadership team at Greenfire decided that these assets have long-term value generation potential and are best placed as a public vehicle where the team can invest with that longer-term horizon to maximize value for existing shareholders.
Right. So I think that sort of leads into sort of my second question here, which is, compared to the SAG-D peers, as you sort of talked about here, do you think you guys are currently trading at a valuation discount? Maybe expand upon the valuation differences between yourself and the other groups out there.
Yeah, that's a good question. Despite what we believe to be strong fundamentals and positioning, Greenfire currently trades at about a 55% valuation discount on a 2024 enterprise value to flowing barrel basis. And that's relative to the core public SAG-D peers that are also pure plays.
Why do you think that is? Why do you think there's such a valuation discount here?
So we think that discount is owing to Greenfire being a relatively newer company with the more limited name recognition and public track record. There's also current lower liquidity, equity trading liquidity, owing to a high level of insider ownership at approximately 55% of the company.
And what are you sort of doing to address that disconnect there?
So to address this valuation discount over time, the Greenfire team is focused on delivering on its production growth strategy to target and deliver that step change free cash flow generation. We're also working hard to engage with institutional and retail investors to educate them on Greenfire's differentiated tier one assets, growth strategy, and talented operational team.
Fantastic. Well, I know we're just sort of hitting on the surface here of the company, and there's a lot more to dive into. I certainly would encourage anyone that is watching this throughout the conference here today. If you'd like to schedule a one-on-one meeting with Robert, talk through some of the impacts on some of the WCS differentials and other things, and how it can positively impact the company. Let's go ahead and get a meeting scheduled here. So again, reach out to me, Blum, BLUM, at lythampartners.com. I'll help coordinate a meeting for you, or again, you could go directly to the conference website, lythampartners.com/spring 2024. Click on that investor and attendee registration list tab there, and we'll go ahead and get you coordinated. So Robert, thank you so much for that high level overview of the company, and look forward to your participation in future events here.
Thank you, Robert, and the whole Lytham team. Looking forward to engaging with investors throughout this whole day.
Fantastic. Thank you.